Hello and welcome everyone to this video. As you can see, we are in a little bit a new setting here. I'm traveling, so I am a little bit in public. You see behind me some people. It's a fun setup here. Welcome everyone to Tesla Trading Week, where we discuss what Tesla stock is going to do this week, maybe, and how we react to it. Here, I'm going to share my latest strategy to generate alpha on top of my core Tesla holding, which is very large as a percent of my portfolio because I'm very bullish on Tesla. So let's begin the whole thing with a quick announcement for our trading group. I know you guys are waiting for approvals. We have a group on X, the Reality Engineers Tesla Stock group. It's amazing. We have nearly 100 applicants now. Today, I'm going to actually approve everyone who I want to approve. The condition to be approved on this group is that you share how many shares you have, and that you share your core expertise or skill, if you're technical, fundamental, macro, or geopolitics, in terms of what you're most interested in and what you're most skilled at. Sorry, it took me a little longer to actually bring order into that group. It's a new thing we're doing, and it's actually very exciting. I will publish a more dedicated video on that tomorrow, where I will tell you what the latest is. But for now, I want to share some very interesting statistics just very quickly, because we're going to go into that tomorrow. I'm never going to disclose anyone's shares, obviously. But so far, we have 88 members that shared their shares. Actually, I know a bunch of you guys, so I'm pretty sure this is accurate. Now, amazing, we have $83 million AUM between us. That's pretty cool. The average position is 2,358 shares. The median position, 1,000 shares of these 88 members. So that's pretty impressive. So all in together, the amount of Tesla money we are managing among all of us, nothing is investment advice, it's all self-help here, is 83 million. That's pretty good. And that's not even counting the latest applicants. So we are getting somewhere. And I will elaborate more why this is important and why I believe we are going into a new age of AGI, of AI and robots that starts as we speak, that will fundamentally change the world, and where it's very important. It's very important because that change will not just be utopian, it could also be very dystopian. And it's not just going to be one utopia or one dystopia for all of us. It will be a utopia for some of us and a dystopia for others, because things are complicated. And the key is to seize control of your assets. That's my central thesis. You need to control your own money. That's why we are doing this, and I hope you're following this a little bit more. That having said, let's look at the latest, what Tesla does. So today we have a very interesting trading day. We started off very negative at 383. So we started the day down, I think nearly 3% or something, from 393 down to 383, a little concerning, but we ended with a crazy and very surprising run from 394 all the way up here to 403, and then after hours it was a crazy run up, and it's not clear to me. I'm still researching what the hell was going on. I don't know what's going on, but we know that Tesla has stacked up a huge amount of catalysts, and people know that 2025 will be transformative for Tesla. So I'm not surprised by this, that Tesla goes up in general. I think it's totally undervalued. You know that my price target is now over 11,000 with the new risk adjustment for 2030, which is a 90% CAGR over the next 5 years per year. So clearly, I think it's undervalued, but it's interesting that the market reacts like this. So that is a very interesting development, and I think we are setting up for this week immensely strong, especially if you compare it with the NASDAQ, right? If you look at the NASDAQ, what it did today, it was down 0.38%. Sure, it ran up here. You see this little run up, but this is like minor compared to what Tesla did. So this does not explain Tesla. We know that the NASDAQ in general, so a lot of you guys who are doing more, technical analysis, you look at Tesla, you come up with all these great Tesla theories, technical trading. What I observe is Tesla is very correlated with the NASDAQ. So that's the NASDAQ over the last month. And you see it's pretty much the Tesla behavior here, right? If you see the little peaks, you see the 3 peaks of the last month and then the drops, and you see the NASDAQ is pretty much doing the same. Tesla dropped a little bit more and the Nasdaq peaked up a little bit more, but you see the three peaks and the troughs, and it's going downhill. And the same is true for Tesla. So I think we are pretty much correlated here a little bit. So what does it all mean for this week? I want to share my latest ideas here, what I do right now. What I'm doing right now is I have a very significant core position, as you know, and that core position is close to 100% of my assets in that specific, it's kind of my, tax exempt account. That is nearly 100% Tesla. There's some other stuff in there, but it's mostly Tesla. And my job here for myself is to generate alpha over that core position. So everything I'm sharing here is normalized to 1,000 shares. So let's assume you have 1,000 shares. If you have 100 shares, you can divide all these numbers by 10. If you have 10,000 shares, you multiply it by 10. I just used 1,000 because it's easy for everyone to handle by dividing or multiplying. So what I'm doing here is I'm adjusting my strategy, mostly because, to be quite frank, since the Fed announced their more hawkish stance mid of December, I was up tremendously last year, nearly 160%, so significant alpha over Tesla, which is always my objective. But I got absolutely creamed since mid of December, right? Heavy losses, a very negative alpha here over Tesla, which comes to some extent with the territory, but that's not what we want. There's still alpha above Tesla, of course, but these kinds of losses are bad, and they come with leverage, of course. But the whole point is, can we mitigate this a little better? So I'm becoming a little bit more conservative with my alpha strategy, even though I think we are much more likely to see a run up than a further drop. But it's not about that. We want to be a little bit more cautious. And I want to share one strategy that I always used, but I will emphasize this strategy a little bit more now. More conservative, more long-term bullish, especially in the setup. So what I'm going to do here is I'm sharing my screen and you see my options trading strategy for this week. And this is also something I will do longer term now to avoid these losses and be a little less greedy. Because in the run-up last year, I was like, I benefited tremendously, but maybe too much. And then I got creamed on the way down. We want to be a little bit more cautious. Let me go into the numbers. So what I'm going to do here, assuming a 1,000 core position, right? Let's assume you have $393,000 and you have it all invested in Tesla. So you own 1,000 shares. That was beginning today, right? So what I'm doing here is I'm putting on a put position, naked puts, negative, right? Short puts. You are getting 390 puts, not anymore, but this morning or Friday night. You got them for about $10. And if you take on negative 12, right, you're selling 12 of these puts out of the money puts, but they were slightly out of the money, right? Because we were at 393. You're actually getting nearly $12,000 for that. So that is your weekly premium that you can keep if you do it right. You have to buy some long puts if you have 1,000 shares. You're not allowed to sell 12 contracts. So you need to buy 12 down here. Actually a little less, but let's just say 12 to make it simple. They cost you 87 cents at a 350 strike price. So the idea here is buy these long puts so you're allowed to sell all these for margin requirements, right? You will lose that money very likely. If you don't lose that money, you have a problem because it means Tesla would drop below 350 this week. Expiration is always weekly, so they expire this week. So you're selling 390, you're buying 350, all expiring this week. And the exact numbers are $998.87. So in total, you're spending $1,000 on the long puts. You're collecting $12,000 roughly on the short puts. Okay, what does it all do? Here's exactly what it does. Here's my little simulation. So here are the end of week prices that we assume in that kind of simulation, right? That's automatically generated by my model here. So if Tesla falls to 370, right? Your core Tesla position is down $23,000. Your portfolio is down $36,000. Your weekly alpha is negative 13,000. So you lost $13,000 more than you would have lost with a 100% Tesla position. If Tesla drops to 370, that means in absolute term, you would have generated negative 3.3%, absolute negative alpha of negative 3%, right? So that's not great, but we don't expect that to happen, right? I'm very positive on Tesla, and as we see today, I was already like, today it looks like I'm pretty right on this thesis. Here's the interesting thing: if Tesla drops to 380 and by Friday this week, the interesting thing is you would only have generated a negative alpha of 0.26%. You would only have lost $1,000. Isn't that surprising? It's not that surprising because you're selling these 390 strike price contracts, the puts, right? So they remain out of the money if you're above 390. So you keep all that money. If it drops below 390, it's very simple math, right? If you get $9.98 for these contracts, you can basically drop to 380 something, and don't lose any money because you got $12,000. You have to buy them back for the same amount. You know, if 390 minus the amount you get is exactly where you break even at zero. So you can afford, and that's the important thing, you can afford with this strategy to have Tesla actually go against you and drop all the way to 380 without really losing money. I will get in a minute to the point why this is also so important for you to generate alpha. So you would only be down $1,000. Now, if Tesla goes up, if Tesla stays above 390, you're collecting the entire money, right? And you see that the alpha basically stays stable, right? So what you're seeing here, I don't know why there is a differential here. I have to look into that. There seems to be like a minor little thing in the formula, but basically you keep that amount, maybe have fees in there or something, but you keep that amount of money, the 10,932, you're getting 11,900 and you're paying 1,000 for these long puts that allow you to actually sell these puts. So that's your net. You gain 10,932 bucks in 1 week. That's a very good salary, right? If you do this every week, you know, you make 44,000 bucks a month in additional alpha. But of course, the simulation then is very simple. You have this added alpha, you make 2.7% or 2.77% basically for a single week in additional alpha. Now, why is that strategy smart? If you remember, in the past weeks, we came out at much more alpha in the best cases, like up to 5 or 6% in a week. That means we were very aggressive, right? Here, this strategy is a little more conservative, but here's why I like it. Why I like the strategy, will stick to it. I think I will stick until there's some insane bull run where I have to get a little bit more hardcore. It basically, here's the strike price. It gives you this buffer that Tesla has to drop $10 before you even start losing money on your alpha strategy. If Tesla drops less than $10 in a week, you already have alpha. If Tesla stays stable, goes sideways, or goes up, you have the full alpha. That alpha is 2.77% in a single week. That means in a month, you're making over 10% on your entire portfolio on additional alpha. That is as much money as many people make in an entire year. You would make this every single month, independent of your Tesla core position. So if Tesla goes up 100%, you make 100% on the core position, but you make another 10% on this alpha strategy. If Tesla goes sideways, you're constantly making 10%. You're making basically, you know, over 100% per year, over 100% a year, independent of Tesla's direction. That is important. And why I also like it is, let's say things go wrong. Tesla drops to 380. No one cares, right? It drops to 380. You didn't even lose money. You do the same thing again next week on a 380 basis. You're selling basically, you know, 375 or 370 puts. You keep doing this all the time. You constantly make that money, and Tesla can't drop forever, right? If Tesla drops to 380, and next week the Tesla drops to 370, and next week the week after Tesla drops to 360, you would constantly not lose money on the strategy. It's crazy. If it drops too much, if it drops 20, sure, you start to lose your money here, right? But you make this back in a week. So even if Tesla would go completely against the thesis and drops to 370, which is pretty severe, end of this week, 370, you would only have lost 3.3%, and you make this back the week after with the same strategy. Even if Tesla drops to 360, which is pretty dramatic, I don't hope that happens. It just takes you 2.5 weeks of this strategy to just make all the money back, and you are at 0 alpha again, from negative to 0. So you see, by applying that strategy continuously, I don't see how this goes wrong in the long term. Even if Tesla moves against you, you make this back in 2 to 3 weeks if it moves badly against you. And if it moves sideways or up, you constantly churn in 10% a month. And that's powerful. 10% alpha, just to make clear what that means. If you have all your money in Tesla and you have 1,000 shares right now, 10% alpha means that you have 1,100 shares after month 1. You have 1,200 shares after month 2. That is real alpha. You're accumulating shares. So I hope that was helpful. That is my strategy adjusted, so we are a little less risky here. This is a constant alpha generating strategy. Hopefully I will keep you updated. Hope to see you tomorrow where we update on the group. And today everyone gets approved who shared their shares. And then we can go a little bit more into what we do and split the tasks up between fundamental, technical, macro, and geopolitical analysis. I think we can build the best Tesla trading group in the world very quickly and show Wall Street a little bit how the future looks like. So see you guys around. Thank you.